Good afternoon or good morning, everyone. Thanks for being here. My name is Blaine Monaghan. I'm the Vice President of Corporate Development of Allegiant Gold. Allegiant is a news story. It was spun out of Columbus Gold in January, so we've only been trading a few months, but it's been an exciting period of time. So I'm glad to tell you a little bit more about the story. Forward-looking statements, I will be making many. Obviously, mineral exploration is inherently risky, but the greater the risk, the greater reward. So I'm going to say a lot of things here that some people might take issue with, and you'd like to talk about it more, then come see me. I think a better issue here is actually if you just had a picture with someone with their pockets turned out. So how do we make money in junior exploration? I really like Doug Casey, you all know him, and he put out a model a number of years ago called the 8 Ps. And honestly, I think if you were to apply this to any company, you're going to have success. So let's apply it to Allegiant and see what we come up with. So we were spun out of Columbus Gold in January. We have 14 gold projects in the US, 11 in Nevada. We plan to drill 10 of them this year, including our flagship project Eastside, where we have 750,000 ounces gold. We want to double that this year and test 9 other projects. So we think this is we're at the right time and the right place to conduct this work. If you were to look at those 8 Ps, the most important one is people, and I'm going to come back to that time and time again. So we've assembled a great board, a great management team. Andy Wallace has discovered 5 gold mines in Nevada where we're focused. We have the former CFO of Goldcorp and Newmont and the past president of Eldorado. So we've assembled a great board, a great team, and that's how you mitigate risk in the junior exploration game, is people. A little bit more about Andy. You can see his track record of discovery in Nevada. This is his backyard. He has been exploring in Nevada since the early 70s, credited with 5 discoveries, a lot of which are still in production today. And you can see that list. It's prolific, and we're hopeful we're going to add another company or another project to that list with this year's exploration program. Politics is something you should also take into consideration. You don't have to open up the Northern Miner every day to know that some of your investments have been subject to risk and seen the resulting decrease in share price. So we're in one of the best jurisdictions in the world, Nevada. Last year it was in 4th place according to the Fraser Institute. This year it's the 3rd. So I mentioned our goals for Eastside this year. We've sort of divided our budget into two programs here. One is to double resources at Eastside from 750,000 ounces gold to 1.5. And the other is testing 9 other projects. First phase drilling program, say 6 to 12 holes per project, determining which ones we want to hold on to, which ones we want to let go. So getting onto Eastside, this was a new discovery for us in 2011. It's a very large project, great infrastructure just outside of Tonopah. We've been focused mostly in one area called the original zone where we've outlined that resource, but there are a lot of targets, there are historical resources, there's past production, and as I mentioned there, you can see the original zone is to the north. So there's a lot of work we could do with the project, but we feel our resources are best spent looking to double the resources there this year. So that's what we're doing. Later on in the years, perhaps we'll look to test some of these other targets and look to make those historical resources compliant or see how they might feed into an overall mine plan moving forward. This is probably the most important slide because when I talked about that 750,000 ounces gold equivalent, it's pit constrained. So there is additional gold mineralization beyond that pit. So our goal is to drill to the west, add ounces there, and redraw that pit outline and capture additional gold mineralization. So we don't think it's a big stretch to go from 750,000 ounces gold to 1.5, and that's important. You can see this is a plan view of the original zone. We've completed 22 holes there this year. We've been focused out to the west in areas that are currently classified as waste or below the pit. So not only are we going to add ounces there, but we're going to reduce the strip ratio, which is also important. It's now over 1 kilometer north-south, 1 kilometer east-west, and 500 meters to depth. So it's big and it can get a lot bigger. The 9 other projects, these are important to note. These are our new prospects outlined by Andy and his team. These aren't recycled, as you might see throughout various mining cycles. People just dust off properties and flog them. These are all new. These have been selected by Andy. These represent our highest priority targets. And I'm not going to have time to get into every one of them, so I'll focus on one, and that's North Brown. So that's our highest priority project. High-grade gold at surface and outcrop in a geological environment favorable for Carlin-type deposits. We have a bulldozer at site right now making roads, and we plan to start drilling there in June. This was another P, the push. So what's going to drive the stock? Well, for us, it's going to be news flow. We have a very aggressive, ambitious program planned. We plan to drill the 10 programs, looking to double resources at Eastside, so you could get a re-rating on a resource in excess of 1 million ounces, and also possibly a new discovery. And that's ultimately our goal here, is to get out there and make a new discovery. Related to that, you can see how much activity we have planned. We have completed that phase 1. We completed that several weeks ago, so 22 holes. We've reported 10. We have 12 more to report, and drilling at North Brown is going to start up next month. So it's going to be a constant news flow, not only with drilling, but drilling results and hopefully a new discovery. That's what's really going to drive this story moving forward. Paper is another consideration. So we don't have too much stock out, about 46 million shares. About half of that is funded in institutional hands. On the retail side, we have approximately 6,000 shareholders. 4,000 of those are American. So this is you can tell by the coloring and the branding, we are really tailoring this for a U.S. retail audience. It is a U.S. gold stock story. Another important P is price. So we're attractively priced right now. This is based just on our pit-constrained resource at Eastside. You can see we trade at about a third to a half of our peers, so we're not getting any value for the historical resources or past production or any of other properties, just Eastside. Promotion is another important P. We've only been trading a short period of time, but we're getting a lot of attention, and that's really just based on the projects, the politics, and most importantly, the people. And I'm just going to keep coming back to people. That's where I'm going to finish up, is with Andy Wallace and the team. You know, mineral exploration is inherently risky. The best way to mitigate that is with the people that have a track record of success, whether in the capital markets or with discovery. And we have that in spades with Allegiant. So if you're looking for a junior resource stock that Doug Casey would say that, hey, it checks all the P's, you should probably take a closer look at Allegiant. I'm over there. Come find me. Thank you very much.